The US dollar debilitates further on growing concerns about whether the safe haven currency had found its footing after 5 straight months of declines, with low interest rates expected to persist in the long term. The US dollar index, which tracks the greenback against a list of other major currencies, was down by 0.05% on Friday to close at 92.93. For the week, it lost 0.44%. The latest speech by Federal Reserve Chair Jerome Powell revealed an accommodative shift in the central bank's approach to inflation. Investors interpreted it that US interest rates could stay lower for a longer period of time, increasing pressure on the US dollar. By contrast, the European Central Bank's rhetoric continues to leave the door more open to further action this year. ECB's Pablo Hernández de Cos noted on Friday that the recovery pace had decelerated in August and that the need for additional stimulus cannot be ruled out. Despite rising on Thursday, the euro versus the dollar pair closed down by 0.08% on Friday at 1.1837, posting a 0.06% fall for the week. Meanwhile, in Britain, mild hopes related to a post-Brexit trade deal with the EU provided modest support to sterling last week. The British pound was advancing for 5 sessions in a row, before falling by 0.44% on Friday. The UK currency lost momentum on the heels of an increase in the number of COVID-19 cases. For the week, sterling still eked out a 0.9% gain. The UK put under lockdown some cities in the north, and over the weekend, PM Johnson was said to be considering tightening restrictions. And now let's take a look at the crypto market. BTC closed at 10,934.5 on Sunday, losing 1.5% for the session. Still, on a weekly basis, it advanced by a solid 5.8%. The Fed's meeting on policy decision was the most significant catalyst behind the cryptocurrency's conflicted market bias. Bitcoin looks ahead at a fruitful week as the market waits for the congressional testimonies from Mr. Powell and the U.S. Treasury Secretary Steven Mnuchin. Meanwhile, in commodities, oil prices posted a weekly gain on Friday, capping a week that saw both benchmarks rebound to above $40 a barrel. Although Brent crude for November delivery lost 0.35% on Friday to settle at 43.15, it still posted an 8.34% rise for the week. Meanwhile, WTI for October delivery rose by 0.34% to settle at $41.11 a barrel, logging a 10.13% gain for the week. The string of bullish news sent oil rallying, with OPEC and the International Energy Agency revising down their respective demand outlooks for this year due to a more fragile outlook on economic recovery, and the OPEC Plus reiterating the critical importance of adhering to full conformity and compensating overproduced volumes as soon as possible. Meanwhile, gold futures posted a choppy trade last week, but still managed to close higher. Gold futures for December delivery settled at 1,962.10 an ounce on Friday, posting a 0.6% gain for the day and a 0.7% rise for the week. Gold investors were uninspired by the FOMC decision because policymakers were reluctant to add stimulus. With the Fed closely monitoring inflation and the labor market, and since it's not scheduled to meet until November 4 and 5th, the focus for gold investors will be on the US dollar and economic data. You've watched the combined review of currency and commodity markets on InstaTV with me, Anna Kasatkina. Stay tuned.